What is the difference between bonus and stock splits? Apparently, from the stock market investor's point of view, it looks the same. So when there is a stock split of 1:1, the price halves and the number of shares in your demat account doubles. Similarly, when there is a bonus of 1:1, the same thing happens, the price halves and the number of shares in the demat account doubles. However, there are three major differences between bonus and stock split that every retail investor need to know. So let me help you understand them, each of them one by one. The first difference is the purchase date. So in case of a stock split, the number of additional shares that you got, the purchase date of it remains the same. So it is equal to your original shares purchase date. So stock has just split and there is no difference in the purchase date of the stock. In case of bonus, the purchase date changes. So the shares that you have purchased, the purchase date for that remains the same. But for the bonus shares that you have got, the purchase date changes to the date when the stock goes ex bonus. The second major difference is the price of the shares. So in case of stock split, the share price that you have purchased reduces by half if there is a 1:1 split. And in case of bonus, the purchase price doesn't change of the shares that you have in your account, but the shares that are extra allocated to you, the purchase price of that shares is zero. So what does this two means is change in purchase date and purchase price is the tax calculation changes. So if you had some shares in your account for say past 1 year, and if a company issues a split, the purchase date hasn't changed, so the LTCG applies to all the shares combined. But in case of bonus, the LTCG applies to the initial purchased shares and the STCG may apply to the newly added shares. Similarly, the price is different, so depending on when you are selling, the calculation of tax changes. The third major difference between bonus and stock split is, in case of stock split, there is no change in the share capital. So this is more from a company's point of view. The share capital that was initially there hasn't changed, only the face value of the share has changed and it has split it. In case of bonus, the share capital changes, so face value of the share remains the same, and then the extra shares that are issued, there has to be a reserves for that, the extra allocation of share capital happens. So now let's try to understand this with a dummy example. So you purchased a stock at 100 rupees and the price of it is 250 rupees now, and you purchased it say 3 years ago. So the stock price has become 2.5x, and if the company issues a stock split, so now let's say the stock split is 1:1. So now let's say you had 1000 shares in your account. So then what happens is you now have 1:1 stock split. So now you have 2000 shares in your account and the share price trades at 125. Your purchase price halves. So now you have a 50 rupees as the purchase price and 125 rupees is the current traded price. The purchase date remains the same as 3 years ago. Let's take the next example where you have 100 shares of a company. Currently it's trading at 250. You purchased it again 3 years back. But in this case, the company issues a bonus of 1:1. So now what happens is you had 1000 shares. Now you have 2000 shares. But the price of 1000 and when the company goes ex bonus, the price reduces to 125 rupees and you have 2000 shares. However, the price of 1000 shares is 100 rupees, and if you sell it at 125 rupees, you have a gain of only 25 rupees. If you use the FIFO accounting method, then first shares goes out first, so first in first out. So now you can sell your shares without incurring too much of an LTCG. However, whatever shares remains that are issued to you as bonus remains as it is in your account, and once you book them, let's say you booked once the price again goes to say 175, then your calculation becomes 175 minus 0 or 1 rupees or 0.1 paise. For accounting purpose you can keep very little amount. So then what happens is the total amount is your profit. In case of stock split and bonus, the calculation is different for taxation purpose as well as how the accounting happens. Though on a trading for a day-to-day trading, the both the process remains the same, the price halves and the number of shares doubles. I hope this helps you understand the difference between bonus and stock split and why we need both of them.